An 8% after-hours drop in Intel stock. What is going on?
There's very little good news in this report for Intel. Essentially, what is happening is the data center business at Intel, which is making chips for the servers that help run the modern internet, also computer networks, also the same chips that big cloud computing companies like Amazon, Microsoft, and Google use in order to build out their presence around the world. That business has been sliding. We saw it last quarter. We're seeing it again for the current period that we're in. And the problem for Intel is that this is a very profitable business unit, and it's also been a great source of revenue growth over the last decade.
Well, another worry has to be that the next business, the smartphone chip business, Intel just got out of that, right? And then Apple went and settled its dispute with Qualcomm. You know, are investors worried about that and what the future holds for Intel?
Well, I think Intel was always much weaker when it comes to smartphone chips than Qualcomm is. And so it was not going to be a huge part of the company's business unless they were able to turn that around. I think the expectation was always that Qualcomm and Apple would settle. It was just on what terms they would. And we saw, as you said, Intel said that it would pull out of the business after Qualcomm, and Apple decided to end all litigation. But you know, in this quarter, what investors are really paying attention to is that they're not going to see the improvement that Intel had promised in the data center business. Bob Swan told Bloomberg earlier this afternoon that essentially it's taking longer than they had anticipated for that demand to pick up, because all of their major clients already have stockpiles of these chips and aren't buying new ones.
Well, Sarah Ponczek, you've pointed out that the semiconductor indexes have outperformed the S&P 500. Is this now a dramatic reversal of that trend?
We'll absolutely see what happens. If you look at the Philadelphia Semiconductor Index, it's pretty amazing, up 35% this year compared to the S&P, which is up 17%. And that's why going into this earnings season, there has been such a large focus around semiconductor stocks, because the narrative has been that demand is waning. Yet even as company after company comes out and issues warning, we haven't seen that turn around yet. Earlier this week, we heard from the likes of Texas Instruments. Their CEO issued a warning, and we still saw the semiconductor index rise. We saw Texas Instruments rise. Well, now we've heard from the likes of Intel. Xilinx, we also heard from today, had its worst day since 2000, and that is starting to weigh on the semiconductor index. Now, next week, we'll also hear from the likes of Qualcomm, which is the largest holding in the index. Intel is the 5th largest. So as we hear more and more, we'll have to see if there actually is a straw that you could say breaks the camel's back if we hear too many warnings on demand.